Welcome back, everybody, for another deep dive.
Yeah.
You know we love to go deep.
We do.
And today we're going deep on Market Wizards by Jack D. Schwager.
Oh, yeah, this is a classic.
It is. And a lot of our listeners are really interested in trading, and especially successful trading.
Hmm.
And what better way to learn about it than from these legends,
Yeah.
these people that turned small accounts into just massive fortunes.
Huge.
And it's a really, really fun read.
Oh, for sure.
Yeah.
I mean, it's one of those books you can just pick up any chapter and dive right in.
Yeah, and the stories are just fascinating.
Yeah.
So what's one of the things that really stood out to you when you were rereading it again for this deep dive?
You know, it really challenges one of the core theories of the market. You always hear about the efficient market hypothesis.
Right.
It basically says all information is already reflected in the market prices.
Oh, so it's like if you were playing chess against a grandmaster
Exactly.
and they already knew all your moves.
Yeah, you're not going to win.
Yeah, there's no way.
Like, that's what it's suggesting, basically, that it's impossible to outperform the market consistently.
Right.
Because everything's already factored in.
Yeah.
But here's the thing. These traders in this book, they've done exactly that.
Right.
They are the living proof that markets aren't always so efficient.
Yeah, they found the cracks in the system.
Yeah, they found those little inefficiencies, those edges
Yeah.
that give them an advantage.
And like one of those cracks that they found is really highlighted, I think, in Ed Seikota's story.
Yeah, Seikota.
He rode this huge bullish market to enormous profits.
Yeah.
And even admitted to making mistakes along the way. But there's this great anecdote
Yeah.
where a friend of Schwager bailed out of this winning soybean trade early,
Oh, yeah.
only to watch the prices just skyrocket for 12 days straight.
I mean, can you imagine?
Yeah, I know.
Like the agony
Yeah.
of watching that trade go up, up, up?
Yeah, and you got out way too early.
Oh, yeah.
But Seikota, he stayed in.
He stayed the course.
Yeah.
And I think that's something that's really interesting here.
Yeah.
It's not just about his patience. It's about his whole approach.
Right.
Like we can assume he had a risk management strategy in place.
Right.
He identified this strong uptrend, and he had predefined exit points
Yeah.
based on, his risk tolerance.
Right.
So it goes beyond just, holding on hope for the best.
Right.
It's about having a system
Yeah.
and sticking to it.
Sticking to the plan even when your emotions are saying, get on, get out, get out.
Exactly. And
Yeah.
that actually leads perfectly into the psychological aspect of trading, which Market Wizards really emphasizes.
Yes, very much so.
It's like trading is just as much a mental game
Oh, absolutely.
as a financial one.
Yeah.
You can have the best analysis in the world, but if you can't control your emotions,
Yeah.
you're going to be in trouble.
They're going to blow up.
Yeah.
And Schwager himself, he even shares in the book his own near-bust experience,
Oh, really?
where emotional turmoil almost wiped him out, even though the trade itself ended up being profitable.
Oh.
And this led him to develop this risk management rule that whenever anything is like seriously messing with his emotional state, he closes all positions related to that event.
Interesting.
Yeah. So it's really about playing defense in trading.
Yeah. Sometimes the smartest move is to just step back, regain your composure, and live to trade another day.
Right.
It's about survival.
Yeah. And you have to ask yourself, like, do you have a plan for managing your own emotions when the market throws these curveballs at you?
Oh, for sure. Because those ups and downs can really mess with your head.
Yeah.
Like, you got to have something.
A system.
Yeah, some kind of system.
Yeah.
To keep you grounded.
So speaking of systems, let's talk about Ed Seikota again.
Okay.
But this time in the context of trend following and system trading.
Yeah.
Because he is a legend
He is legendary.
in trend following.
Yes, for sure.
Believes in, identifying those strong market trends and writing them.
As long as they last.
Yeah. And using this systematic approach to enter and exit trades. And, in the book, Schwager even describes how he created his own trend-following system based on a letter from Richard Dantian,
Oh, wow.
another pioneer in the field.
Yeah.
And get this,
Okay.
Seikota's model account went from $5,000
Okay.
to over $15 million.
Wow.
It's insane.
Yeah.
But there is a crucial caveat here.
Yeah.
Seikota emphasizes combining any system with your own judgment.
Right.
So you can't blindly follow any system,
No.
no matter how well it's designed,
Exactly.
because it can be dangerous.
Right.
And he gives this great example.
Okay.
Imagine sugar trading at a price barely above the cost of the bag it comes in.
Okay.
Like all the trend following systems might be screaming short sell,
Right.
But your fundamental
It's
analysis
saying this is nuts.
is saying this is ridiculous.
Yeah,
Like, you have to override the system.
Yeah, you got to use your judgment.
Sometimes.
Yeah.
Right.
It's about recognizing that no system is perfect.
Right.
And sometimes you have to go with your gut
Yeah.
based on a deeper understanding of what's actually happening in the market.
And that brings us to another fascinating trader, Michael Steinhardt,
Okay.
who gives us insights into how the market has evolved over, decades.
Well, over a long period of time, yeah.
What strikes me about Steinhardt is his emphasis on flexibility.
Okay.
He doesn't believe in a fixed formula for success.
Interesting.
He even talks about how he shifted from analyzing these long-term secular growth trends to a more short-term trading-oriented approach. And that shift, I think, really reflects the changing nature of the market itself.
Yeah, I mean, think about how much the market's changed over the last few decades.
Oh my God.
It's been crazy.
Yeah.
So you got to be adaptable to survive and thrive.
And he observed the rise of the wise guys.
Oh, yeah. The skilled traders.
Yeah.
The aggressive ones.
Yeah, and the increasing influence of institutions in the market.
Yeah.
Right? So the landscape was changing, and he adapted with it.
He did.
And this raises a big question, I think, for us and for everybody listening.
Yeah.
How can you stay adaptable as you navigate today's market?
Right. What works now might not work 5 years from now.
Exactly.
10 years from now.
Right.
It's constantly evolving.
It's something to definitely ponder as you develop your own trading style.
Absolutely.
Right?
Figure out what works for you now.
Yeah.
And be ready to change it up.
Yeah.
If the market shifts.
And now for like a masterclass in independent thinking.
Okay.
Let's turn to Jim Rogers.
Oh, yeah. Jim Rogers.
He is famous for his contrarian views.
He is.
And the book shares this great example of his approach.
Okay.
Back in 1982, he decided to buy German stocks.
German stocks.
Yeah.
Wow. Everyone thought he was crazy.
Yeah, I bet they did.
But he ignored all the research.
All the conventional wisdom.
All the naysayers.
Yeah.
He sensed this coming bull market in Germany.
Okay.
And it ultimately paid off big time.
Yeah.
Huge.
Sure. Right. It's such a powerful illustration, I think, of the potential rewards of independent thinking.
Absolutely.
And having conviction in your own analysis,
Mm-hmm.
even when it goes against the grain.
Yeah. It's not easy to do that, though.
No.
To go against the crowd.
Yeah.
But sometimes it pays off big time.
And this leads us to a recurring theme that I think echoes throughout Market Wizards.
Yeah.
The danger of following the crowd.
Oh, yeah. The herd mentality.
Rogers puts it best.
What does he say?
He says, never ever follow conventional wisdom in the market.
Yeah.
It's tempting to jump on the bandwagon, especially when everyone seems to be making money.
Oh, for sure.
But often that's when things are about to go south.
Yeah. You get caught up in the euphoria and then crash.
Developing your own view
Yeah.
and recognizing when the emperor has no clothes is essential for success.
Absolutely.
It's about questioning those assumptions,
Mhm.
doing your own research, and not being afraid to go against the tide when your analysis supports it. It's scary, but sometimes that's where the biggest opportunities are.
Exactly.
When everyone else is running one way and you're going the other way.
And you're like, no, I see something different here.
Yeah, I think that's a good place to stop for part 1
Perfect.
of our deep dive.
Yeah, we will.
We'll come back
We'll come back.
and talk more about it.
Yeah, we've got a lot more to uncover
We do.
in Market Wizards.
Yeah, so much wisdom in this book.
So much wisdom.
It's incredible.
So join us for part 2.
All right, so we're back.
We're back, part 2 of our deep dive into Market Wizards.
All right, so where'd we leave off?
Well, reading about all these Market Wizards, I'm struck by how they just seem to have this sixth sense
Yeah.
for spotting opportunities that everyone else misses.
Yeah, they have this knack for it.
Yeah, like take Brian Gelber, for example.
Oh, yeah, the bond trader.
A bond trader.
Right.
He was operating back in the 80s
Yeah.
when Japanese investors were this major force
Oh, huge.
in the U.S. Treasury bond market.
Right. And his insights into the Japanese trading style back then are just fascinating.
Yeah, they were very different.
He describes how they often moved as a group,
Okay.
creating these massive waves in the market.
Interesting.
He even calls them cannonball traders.
Cannonball traders. I love it.
Because they would just jump in with such force
Well,
that it would just
Make us flash.
yeah.
Yeah.
There's a story about this one Japanese trader who bought up almost every long bond he could get his hands on,
Wow.
practically clearing the screen.
Wow. Just buying everything in sight.
Yeah. And what's interesting is this trader didn't even seem to fully grasp the impact of his actions.
Really?
He was baffled when the price spread between cash bonds and bond futures went haywire after his massive purchase.
Oh, wow. So he didn't understand, like, the mechanics of the market
Right.
as well as he thought he did?
Yeah.
Interesting.
It's a good reminder that even with immense buying power,
Right.
you still need to understand the market dynamics.
You got to know how the game works.
Yeah, you can't just come in
There's throw your weight around.
and throw your weight around.
Yeah.
Like, you actually have to know what you're doing.
Exactly.
Gelber also touches on this practice of dual trading,
Okay.
where a trader executes orders for both their own account and their clients
Oh, that sounds a little,
simultaneously.
yeah, it sounds a little dicey.
Yeah, like a conflict of interest waiting to happen.
Yeah,
Right.
for sure.
And he acknowledges those concerns, but argues that dual trading can be done ethically
Okay.
if the trader prioritizes the client's interests
Yeah.
and avoids exploiting their knowledge of order flow.
Okay, so it's about transparency
Yes.
and fairness.
Yeah.
Okay.
Now, while Market Wizards celebrates all these, amazing trading titans.
Yeah, as these legends.
Right.
Yeah.
It doesn't shy away from the challenges faced by everyday investors. In fact, Schwager dedicates a whole chapter to dissecting common mistakes,
Oh, wow, that's helpful.
drawing from his interview with William O'Neill,
Oh, William O'Neill.
the founder of Investors Business Daily.
Oh, well, yeah, no.
And O'Neill offers this wealth of practical advice.
Okay.
One of the most important, I think, is the need for a sound trading plan
Okay.
based on a proven methodology.
Yeah, you can't just be flying by the seat of your pants.
No, this is not about chasing hot tips or relying on your gut feeling.
No, you need a plan.
Yeah,
You need a system.
a system.
Yeah.
And he stresses the importance of picking stocks with solid fundamentals
Yeah.
and technical indicators,
Right.
managing risk with stop-loss orders,
Okay.
and having the discipline to stick to your plan
Even when things get crazy.
even when the market gets wild,
Yeah.
right?
Yeah.
And he also cautions against some of the classic pitfalls,
Yeah.
like averaging down on losing trades
Oh, that's a bad
or
one.
holding on to losers for too long, hoping they'll magically turn around.
Yeah, hoping and praying is not a trading strategy.
It's a recipe for disaster.
Yeah.
And he's not just speaking theoretically. He actually lays out 16 common mistakes investors make.
Wow. 16.
16. And I found that list incredibly helpful.
Yeah.
Like a real wake-up call.
I bet.
Some of my own bad habits.
Oh, I'm sure we all have them.
Right.
It's easy to get caught up in the excitement of the market and lose sight of those basic principles.
Right. And that's where the psychology comes in again.
Absolutely.
Speaking of psychology,
Yeah.
the book features this unnamed floor trader
Okay.
who offers this calming voice of reason amidst all the talk about strategies and systems.
Yeah.
And he stresses the importance of knowing yourself
Yeah.
and accepting your limitations.
That's a tough one,
It is.
but it's important.
Yeah,
yeah.
he even admits there's this colleague who consistently outperforms him,
Oh, wow.
but instead of trying to copy his colleague's style,
Yeah.
he focuses on what works best for him given his own strengths and weaknesses.
Right. It's about finding your own path to success,
Exactly.
not trying to be someone else.
Yeah.
Okay.
And he paints this very realistic picture of a trader's year.
What's that?
4 hot months,
Okay.
2 cold months,
Right.
and 6 months of ups and downs,
Oh, a roller coaster.
leading to sleepless nights.
Oh, I bet.
Right.
It's a tough business.
It is.
It's not for the faint of heart.
No, it's not.
So you got to be able to handle those ups and downs
Yeah.
emotionally.
Yeah. Now, we can't talk about market wizards without touching on options trading, a
Okay.
market that can be both complex
Yeah.
and incredibly rewarding.
Yeah, options are a whole other animal.
Right.
It's like trading on steroids.
Right. And the book features interviews with traders who specialize in this arena,
Okay.
including Tony Saliba,
Oh, yeah. Tony Saliba.
a master of option spread strategies.
Yeah, he's a legend.
And one strategy he uses is the butterfly spread,
Okay.
which involves buying and selling options
Right.
with different strike prices
Yeah.
to create this position
Yeah.
with limited risk and limited reward.
So it's a way to kind of control your risk.
Yeah. Yeah.
Sounds complicated.
It is complicated.
Yeah.
But he explains it beautifully in the book.
Yeah.
He explains how he uses these butterfly spreads to capitalize on periods of low market volatility, just patiently waiting for those opportunities to emerge.
Yeah.
Like a spider waiting for a fly to land in its web,
Yeah.
just waiting.
He emphasizes the importance of understanding options pricing
Right.
and volatility,
Yeah.
managing risk carefully, and having the patience to wait for those setups.
Patience is key in trading.
And it clearly paid off for him.
It did. Yeah, he's very successful.
$50,000 account into millions
Oh,
using these strategies.
that's incredible.
It's a great example of how specialized knowledge and disciplined execution
Right.
can lead to extraordinary results,
Absolutely.
even in a complex market like options.
Yeah, options are not for beginners.
No, they are not.
But if you know what you're doing,
Yeah.
you can make a lot of money. Now, Market Wizards isn't just about the technical side of trading.
Okay.
It also delves into the personal journeys of these successful traders, their struggles,
Right.
their triumphs.
Yeah.
And one unnamed trader shares this cautionary tale about the danger of letting material desires dictate your trading decisions.
Oh, that's a good one.
He became fixated on buying a castle in the south of France.
A castle.
Ah,
Yeah, it's a big goal.
big goal.
Yeah.
And this obsession led him to take on this excessively large position in soybeans, throwing his usual risk management principles out the window.
Never a good idea.
Yeah.
When emotions get involved.
Talk about letting your dreams get the better of you.
Right.
What happened?
Yeah, so what happened?
Well, he ended up trapped in a limit down market,
Oh, no.
unable to exit his position, and suffering substantial losses.
Oh, wow. So the castle dreams went up in smoke.
It's a powerful lesson about the importance of keeping a clear head,
Right.
not letting emotions like greed
Yeah.
cloud your judgment.
Fear and greed. Those are the two big ones.
It's a classic example of how our desires
Lead us astray.
Yeah,
Especially when money's involved.
especially when money's involved.
Yeah.
But Market Wizards also explores the positive side of psychology.
Okay.
Schwager interviews Dr. Van K. Tharp,
Oh, Van Tharp.
a psychologist who specializes in helping traders overcome those mental barriers.
Okay.
And Tharp offers this fascinating perspective on the role of beliefs
Okay.
and self-sabotaging behaviors
Yeah.
in trading performance.
Interesting.
He studied both successful and unsuccessful traders,
Okay.
identifying key differences in their mental approaches
Yeah.
and their emotional responses.
It's interesting.
So it's not just about having the right strategy, but also the right mindset.
The right mindset. Yeah.
And Thop emphasizes developing empowering beliefs,
Okay.
managing stress effectively, and cultivating this winning mindset.
Yeah, it's all about mindset.
Yeah, he believes that mastering your inner game is as crucial as understanding market dynamics.
Yeah, you got to have both.
Yeah.
You can't just have one or the other.
And here's an interesting twist.
Okay.
Tharp himself chooses not to trade,
Really?
despite his deep understanding of trading psychology
Interesting.
and his access to some of the best traders in the world.
Wow.
He feels it would conflict with his role as a coach and mentor.
Okay. So he's dedicated to helping others succeed in trading.
It's like he's found his own unique niche
Yeah.
in the trading world.
He's found his calling.
Yeah.
That's great.
You know, we've talked about so many brilliant traders and their unique approaches.
Yeah, we have.
But there's this one common thread that runs through all their stories.
What's that?
The importance of independent thinking.
Oh, absolutely.
We've seen it with Ed Seykota, Jim Rogers, Marty Schwartz.
Yeah.
They all achieved remarkable success by charting their own course.
Right.
By refusing to blindly follow the herd.
They were not sheep.
And Schwager emphasizes this point throughout the book.
Yeah.
He observes that many of the traders found their greatest opportunities when they identified situations where the consensus view was dead wrong.
Oh, interesting.
They developed this uncanny ability to see through the hype, to spot those mispriced assets that everyone else was overlooking.
They could see the emperor's new clothes.
Yeah.
When everyone else was praising his magnificent attire.
Exactly.
Yeah.
And they understood that market sentiment is often driven by fear, greed, herd mentality, creating opportunities for those who can think independently and make those contrarian bets.
Yeah. But it takes guts to do that.
Yeah,
to go against the crowd.
No, this doesn't mean you should just go against the grain for the sake of being different.
No, you got to have a reason.
Yeah, it's about developing your own analytical framework.
Right.
Conducting thorough research and having the courage to trust your own judgment, even when it diverges from the mainstream view.
Yeah, you got to believe in yourself.
Yeah.
And your analysis.
It's about having conviction.
Conviction,
in your ideas. And not being swayed by the noise.
The noise of the crowd.
Of the market.
Yeah.
Now, we've covered a lot of ground in Market Wizards.
We have.
It's a dense book.
It's packed with wisdom.
It is packed with wisdom.
Yeah.
So,
Let's take a break
yeah, let's take a break,
and come back for part 3.
and we'll wrap it all up.
Sounds good.
See you soon.
All right, so here we are.
Back for the final part.
Part 3 of our deep dive.
Into market wizards.
It's been a wild ride.
It has been a lot of wisdom.
So much wisdom.
I know we've thrown a lot of information at everybody.
We have.
So let's take a moment to just distill, like, the key takeaways.
Okay, good idea.
What are, like, the big things that people should be walking away with from this book?
Well, one of the biggest lessons, I think, is that the efficient market hypothesis, while it's popular in academia,
Yeah, it's kind of like the go-to.
the go-to theory,
Yeah,
it doesn't tell the whole story.
right.
Like the traders we've discussed, they consistently found ways to exploit those market inefficiencies,
Right.
proving that beating the market is possible.
It's not impossible
It's not impossible.
if you have the right approach.
Exactly.
But it's not just about having, like, this brilliant strategy.
Right.
Right? The book really hammers home the importance of psychology and trading.
Oh, absolutely.
Like, over and over again.
Yeah, discipline, emotional control, risk management,
Knowing yourself.
knowing yourself.
Right,
Yeah.
your strengths, your weaknesses.
Yeah, these are all crucial for success.
Absolutely.
It's not enough to have a winning system if you're constantly battling fear and greed.
Yeah, it's like having this high-performance sports car,
Yeah.
but not knowing how to handle it properly.
Right. You just crash and burn.
Yeah, you're just going to end up in a ditch.
Yeah, that's a great analogy.
So mastering your inner game is just as important as mastering those technical aspects of trading.
Right.
What else? What other big takeaways?
Well, adaptability is another key one.
Oh, yeah.
The market is constantly changing. So what worked yesterday might not work tomorrow.
Right.
Like all these traders in the book, they demonstrated a willingness to adapt
Yeah.
and evolve their strategies.
They weren't stuck in their ways.
No, they were constantly learning
Right.
and evolving.
And then refining their approach.
Exactly.
Yeah.
So stay curious.
Hmm.
Learn from your mistakes
Mm-hmm.
and just continuously refine those skills.
And the market rewards
Who
them.
can keep up
Yeah.
with its ever-changing rhythm?
And of course, we can't forget the power of independent thinking.
Oh, yeah.
Contrarianism.
Yeah, those market wizards, they weren't afraid to go against the grain.
They're like, nope, I see it differently.
Yeah, to make those bets that others shied away from.
Yeah.
They understood that the crowd is often wrong.
Mm-hmm.
And that true opportunity lies in identifying those situations where the consensus view is just out of whack with reality.
Yeah, it's like having that superpower to
Yeah.
see the emperor's new clothes
Yeah.
when everyone else is praising his magnificent attire.
Exactly.
Now, this doesn't mean you should just go against the grain for the sake of being different.
No, you got to have a reason.
Yeah, it's about developing your own analytical framework,
Right.
conducting thorough research,
Yeah.
having the courage to trust your own judgment,
Even when it's different
even when it diverges.
from the mainstream view.
Yes.
Yeah.
So as we wrap up our deep dive into market wizards,
Yeah.
I want to leave everybody with a thought-provoking question.
Ooh, I like it.
Okay.
Lay it on me.
If you could ask one of these trading legends
Yeah.
for a single piece of advice,
Okay.
who would you choose and what would you ask?
Wow, that's a fantastic question.
It really challenges you to think about.
It does.
Like, which of these trading philosophies
Yeah.
resonates most deeply with you?
Yeah. Would you seek guidance on trend following from Ed Sykota?
Yeah.
Or maybe tap into Jim Rogers' contrarian wisdom?
Or maybe you're like, I really need to get a grip on my emotions. Marty Schwartz helped me out.
Yeah. Or pick Marty Schwartz's brain about mastering your emotions.
Yeah.
Yeah. Each of these market wizards offers such a unique perspective on the market.
Mm-hmm.
It's about finding the one whose approach just aligns most closely
Yeah.
with your own trading style and personality.
Absolutely.
Yeah.
And remember, guys, the most important lessons from market wizards, they go beyond those specific strategies or techniques.
Right.
It's about cultivating the right mindset,
Yeah.
developing that discipline,
Mhm.
and embracing the challenge of the market.
Yeah. Trading is a journey,
It is a journey.
not a destination.
It's a lifelong pursuit
Exactly.
of knowledge and self-improvement.
And you never stop learning.
You never stop learning.
Yeah.
Thanks for joining us on this deep dive into market wizards.
Yeah. Thanks for listening, everybody.
We hope you found these insights valuable.
We hope you learned something.
We hope you did, and keep exploring.
Keep learning.
Keep learning. Keep pushing those boundaries
Yeah.
of your trading journey.
And who knows?
Who knows?
Maybe one day you'll be sharing your wisdom
Yeah.
as a future market wizard.
As a future market wizard.
That's right.
All right. That is it for this deep dive.
Until next time,
We will see you all on the next one.
take care.